Top 10 well-known, but little understood reasons why most startup business fail. And here is what you need to know to survive joining that death toll. Top 10 foolproof steps to decode a marketplace for any product or service, both offline and online. Make sure you watch until the end of the video, because number 3 and 9 are the keys to your dream business growth. The iron law of the market. Market matters the most. And neither a stellar team nor a fantastic product will redeem a bad market. Markets that don't exist don't care how smart you are. 10 ways to evaluate a market. So often people are working hard at the wrong thing. Working on the right thing is probably more important than working hard. If you're thinking of starting a new business or expanding an existing business into a new market, it pays to do some research before you leap. The 10 ways to evaluate a market provide a back-of-the-napkin method you can use to identify the attractiveness of any potential market. Rate each of the 10 factors below on a scale of 0 to 10, where 0 is terrible and 10 fantastic. When in doubt, be conservative in your estimate. 1. Urgency. How badly do people want or need this right now? Renting an old movie is low urgency. Seeing the first showing of a new movie on opening night is high urgency, since it only happens once. 2. Market size. How many people are purchasing things like this? The market for basket weaving courses is very small. The market for cancer cures is massive. 3. Pricing potential. What is the highest price a typical purchaser would be willing to spend for a solution? Lollipops sell for $0.05. Aircraft carriers sell for billions. 4. Cost of customer acquisition. How easy is it to acquire a new customer? On average, how much will it cost to generate a sale in both money and effort? Restaurants built on high-traffic interstate highways spend little to bring in new customers. Government contractors can spend millions landing major procurement deals. 5. Cost of value delivery. How much will it cost to create and deliver the value offered, in both money and effort? Delivering files via the internet is almost free. Inventing a product and building a factory costs millions. 6. Uniqueness of offer. How unique is your offer versus competing offerings in the market, and how easy is it for potential competitors to copy you? There are many hair salons, but very few companies that offer private space travel. 7. Speed to market. How soon can you create something to sell? You can offer to mow a neighbor's lawn in minutes. Opening a bank can take years. 8. Upfront investment. How much will you have to invest before you're ready to sell? To be a housekeeper, all you need is a set of inexpensive cleaning products. To mine for gold, you need millions to purchase land and excavating equipment. 9. Upsell potential. Are there related secondary offers that you could also present to purchasing customers? Customers who purchase razors need shaving cream and extra blades as well. Buy a frisbee, and you won't need another unless you lose it. 10. Evergreen potential. Once the initial offer has been created, how much additional work will you have to put in order to continue selling? Business consulting requires ongoing work to get paid. A book can be produced once, and then sold over and over again. When you're done with your assessment, add up the score. If the score is 50 or below, move on to another idea. There are better places to invest your energy and resources. If the score is 75 or above, you have a very promising idea ahead. Anything between 50 and 75 has the potential to pay the bills, but won't be a home run without a huge investment of energy and resources. The hidden benefits of competition. The competitor to be feared is one who never bothers about you at all, but goes on making his own business better all the time. One of the most common experiences of a first-time entrepreneur is discovering that your brilliant business idea is not as original as you thought. Other businesses are already offering similar products or services. This would shake anyone's confidence. After all, why bother when someone else is doing what you want to do? Cheer up. There are hidden benefits of competition. When any two markets are equally attractive in other respects, you're better off choosing to enter the one with competition. Here's why. It means you know from the start there's a market of paying customers for this idea, eliminating your biggest risk. The existence of a market means you're already on the right side of the iron law of the market. So you can spend more time developing your offer instead of proving a market exists. If there are several successful businesses serving a market, you don't have to worry so much about investing in a dead end, since you already know that people are buying. The best way to observe what your potential competitors are doing is to become a customer. Buy as much as you can of what they offer. Observing your competition from the customer's perspective can teach you an enormous amount about the market. What value the competitor provides, how they attract attention, what they charge, how they close sales, how they make customers happy, how they deal with issues, and what needs they are not serving yet. As a paying customer, you get to observe what works in your market and what doesn't before you commit to a particular strategy. Learn everything you can from your competition and then create something even more valuable. Subscribe to the channel to learn more from other videos like this.